Good evening, everyone. This is Rodney with the Triton Wave Market Outlook for Monday, January 30th, 2017. And this is brought to you by Triton Wave Consulting. The Triton Waves are early warning market timing indicators used in all time frames in all markets worldwide. And your disclaimer. All right, let's start off by looking at the 30-year bonds, and I'm going back here to 2009. This chart goes back all the way to 1994, where the waves start participating. But you can see the general trend, how the waves are following up here, a break here, following up here, down, a little bit neutral in here, neutral to sideways, then it pops up. And then the wave pops up, the price pops up, and you can see back and forth. The bigger ones are happening later in the last well, since 2011 to 2013 to 2015, and now for the first time since March of 2015, so 22 months. This has been above zero. So in other words, when the first wave went above zero, it was 142.04, and when it reached its peak, let me see here, 5 months ago, when it reached its peak, well, actually 22 months later, in August, it was 176. So huge move. If you're an institutional trader and you've got 10,000 contracts, then you made your retirement. All right, but this is what I'm looking at for the little guys. When this went above zero, when this went above zero and this went below zero. Now, the reason I have two waves most of the time, I highlight two waves most of the time, is because the first one gives you a heads up of what's going to happen. Now, it doesn't mean that it's not going to bounce off of these major trend lines, and it did bounce, and I'll show you where it bounced on a smaller time frame chart, up to here into resistance on a smaller time frame chart. But this is the first time. Note this minus 0.00. Okay, that's going down. It's either going to show up tomorrow or the next day, but it's going to be below zero, which more than likely means that this is heading for 145.16. It doesn't mean it's going to there won't have hiccups on the way, but I'll show you on a much smaller time frame chart just how that's going to look. Let me pull up a 55. Hang on one second. Okay, so on this chart here, the daily that we're looking at, it doesn't look like much is happening. I did actually make a call about 3 weeks ago, 4 weeks ago, once this broke below zero and it got below. This is the Triton minor wave, the one in the purple, the one in the blue is the Triton major wave, and you'll often see them toggling back and forth between them. Once it breaks one of these, usually heads down here. So when this was way back up at 156, made a call right about the bottom of this at 145. It made it to 146 and change, 147. Almost hit the target, but that's not bad. So what happened was that I got an indication on a smaller time frame chart that this was going to go up. Now, what I wanted to show you was this chart that I'm showing on the left here is a 144, and you can see this goes back to the edge of the chart on January 1st. Okay, so if you look from here all the way across January 1st, then you can see just looking at the waves, not the price, because you can barely see the price in the graph, but just looking at the waves from this corner of the chart, you're only looking at this, and this doesn't look like much on a daily chart. So I'm going to show you this I'm going to show you this chart on the left blown up. Hang on one second. Let me just make this a 144. And then you can see the whole thing and all the opportunities that there are. Let's stretch that out a little bit. And I'm going to add the session breaks so you can see how many days it's taking to do all this. So this is from the beginning of January that I showed you on the chart just before. All right, look at all these opportunities. Now, on the daily chart, looks like it's going sideways. On this chart, boom, look at that, right down to, this is like, if this is the minor, this is the major, this is like the super major right here. I'm not going to tell you what line that is, but that's my line. Okay, so it bounced off of here. Now, even though these trend lines, even though these waves are going down, boom, boom, confirmed down here, when it hits these major support waves, you just take your profit. And sometimes those are the target, sometimes they're price targets, sometimes they're just get out because they are going to bounce. They're all based on Fibonacci progressions. And even if you and these are playable on a very small time frame chart, you can actually see this happening. I don't know if my tick charts go back that far on a smaller time frame. Well, the 144 does, but I think you can see that on the 21 or the 55. So this comes back down again, right here for a very nice play. Comes back up here. Let's see if it hits any. Okay, so when it comes back up to here, I think there is a. Hang on one second. All right, ES, big picture. You can see this going back all the way to 2003. This is 2000. I don't know what the waves look like there because they're just. I need 30 years or 40 years of data for actually these very large time frame waves to work to populate. But you can see them. The first one that crosses here is 2003 to 2008, and nobody saw. Most people did not see this coming in 2008. These waves told you absolutely on March 17th, which happens to be St. Patrick's Day, on 2008 that there was something wrong. Now, you may have taken a lot of heat, but anybody who shorted there, according to this wave, got paid a lot. Okay, we're talking 1,400 down to 666, and so when it starts bottoming out like this on a huge looks like an ocean bottom of like 6 miles, 7 miles deep. Then it comes back up again. This rode all the way back up to August, I believe, July, August area, or June, yeah, July, mid-July, and it started getting choppy, but choppy to the downside. Now, there are definitely plays up and down on a daily basis. Now, this is still up, this is still up. The second wave is still up. I don't know how for long. I don't know for how long. If this breaks to the upside and this continues to the upside, we're going to see 2,500 on the ES. If, however, this goes sideways to down and shorter term charts, you can play in and out 1 or 2 times a day for some good trades. I'll show you in a shorter time frame one. This looks like it actually could come down 100 points. And it could happen very quickly, and the world's going to look like it's coming to an end. As this moves above zero, that might be a perfect time to get in. Or, if the waves do not confirm and actually go below zero, then you basically got to get out of any longs that you have. All right, let's break this down into a smaller time frame. Okay, looking at the 144 minute, you can see all the way back to October 2015, the moves, the nice smooth moves. These are for people who just want to buy the S&P or the OEX and buy the contracts, buy the options, do spreads, butterflies, whatever you want to do with the upward bias. 1918 to 2093 on this move. This went sideways, this went back up, this went down, and this has gone back up since after the inauguration. So there was, I do have a smaller time frame chart that gave you a heads up that this was going to happen. I don't remember which one. I think it's like it might be the 21. But basically, what I want to show you is that this has gone up and up since the election. And for the first time since the election, this is starting to hover 0.76, about zero. So I would consider this neutral territory because either so far above zero on wave number 4, wave number 3, wave number 2, that this would be a sideways to down, and it looks like it could go back up, but I don't know until the waves tell me. So if we look at a very much smaller time frame chart, I like using the 987 volume chart on the ES, and let's just stretch that out a little bit. Is it volume? Okay, so this is, let me put in a, hang on one second, let me put in the session dividers to see how many days we're getting here. Nuts. Nah. This isn't fluid. This doesn't really look, this is not looking right. So in that case, let's look at some other stuff here. All right, smaller time frame. I put in the session break so you can see how many days you're getting out of this. And these are nice clean breaks. Usually when I'm looking at something, I'm trying to coordinate what's going on with the New York Stock Exchange tick chart, what's going on with regard to the waves, what's going on with the Triton waves with regard to the price of the ES. And just as an example, on the left-hand chart here, it's a 21-minute tick chart of the New York Stock Exchange. And you can see, let me bring this in a little bit tighter. So, and these are all session breaks, so you can see how many days are involved here. Okay, so you can see this almost to the end of the chart. Let me move this a little bit this way. All right, so when this goes above zero, even though the wave that you're looking at, the wave that I'm looking at, the 377 in this instance, 377 tick chart, isn't giving you a clean bite on the wave number 1, I start deferring to the more stable, longer waves. However, with that in mind, look at the waves as they apply to the 21-minute New York Stock Exchange tick chart. Now, when this goes above zero, see the cursor on the second wave right in here, and this happens. This goes above zero, starts going above zero here, but it's not as clean because of all the chop here. This is well below zero for, this one is below zero for the last 5 days before it. You can't see it on the chart, but well, here. For the 5 days before it goes above. Now, this goes above zero on the waves on the 21-minute New York Stock Exchange tick chart before the price. So the price is down here, and I'm looking at this over here thinking this is going to go up, and this is what happens. You can either wait for this to happen, or you can take your cues from the volume chart. I mean, from the tick chart, sorry. So, from the New York Stock Exchange volume tick chart. So this goes above zero here, you take a little bit of a hit here, and then boom, this goes up. Now track this on the left, track the price on the right as I'm moving to the left, and you can see that this starts going down. It quits right about in here. Now the volume quits, but surprise, surprise, the price does not quit. So the price is going sideways to down, you know, like up and down 10 points on the ES, and it hits a trough of this yellow line is a 21-minute exponential moving average of a 21-minute volume tick chart. You get all that? I'm not going to repeat it. Okay, so when this goes below zero here, you would think that the price would go, but it didn't. It held strong. Now, on lower time frame charts like the 987 volume chart, you get buy signals right in here. But the volume on the left-hand chart is already giving you a buy signal here. After the trough, it comes back up, does a 50% retracement on the 21 EMA, and then this goes, and this just completely takes off because it didn't go down in the trough with the price. It only went down with the volume. And then when this takes off, when this goes above zero, this is your lead indicator right here for this instant, and it works actually quite often. And this is where you get in right here on the 377 tick chart on the ES. And this happened on, I believe, on Tuesday at 2261, and it gave you almost 40 points. So, and then you get a sell signal, and sometimes I use lower time frame charts for sell signal, or just peaks or trend lines or minor waves, major waves, super grand waves, whatever it is. This already got you out right here, and this has shown you short since then. So wherever it leads to, we're down 675 right now, and it's almost 10 o'clock. It's 9:53 in the evening, Sunday night Central Time. That's all I have for tonight. Have a great evening, and I will see you at the next update. And by the way, I'm going to be doing shorter versions of these 3 times a week for subscribers, as well as text messaging moves that I see coming in. You know, like if a move comes in like this, and I will be texting that out, as well as doing like 3 videos a night. So if you want to become a subscriber, stay tuned. I will give you that information right now. I am Triton Wave Consulting. I specialize in 30-year bonds on the ES, and you can follow me on LinkedIn or Twitter at Rod Julian. If you want to be a subscriber or a client, please email me at rodney@tritonwaveguy.com. Have a great evening. Have a lot of fun trading. It's going to be a heck of a time. Take care. See you at the next update.